Hello there, Prez. We're having a little technical difficulties. Anyone who was here waiting for us to get started,
Yes, we were.
but we are here now. And how are you?
I'm great. How are you?
I'm hanging in there. So, Prez is usually the one out of the two of us that I have been asking to choose our topics. And he chooses such great topics. I usually say, yeah, that sounds good. And so this week, Prez, could you share what our topic of the day is?
Today's topic, we're basically going to be discussing some of the many ways to possibly maximize your gains and your investment journey in order to obtain millionaire status, maybe sooner than retirement age.
So is this something that came to your mind because you feel like you and other people may have are getting started a little later in life and really are behind in their retirement goals? What drove you to choose this topic?
Basically, if you can remember our conversation last week, you displayed a chart showing the monthly contribution needed per age in order to obtain $1 million by the age of retirement or sooner.
Hmm.
Now they had on the chart, it had different age brackets and it showed the monthly contribution for each age bracket. Now, a lot of us that are probably watching the stream are 35 years or older. So they'll see the numbers on the screen and maybe possibly get discouraged because maybe they can't afford to keep up with those monthly contributions. So that could just possibly discourage them from getting started in investing. And I'm here to tell you that there are ways to shorten that time period.
Okay. Okay. So yeah, I mean, we there's nothing we can the earlier the better, but you know, once you have to start from where you are today. And you have to move forward from when you learn and when you know better, you do better and you get started with it. So don't let that discourage you. And I definitely, just because we're using the amount of $1 million, do what you can and set your own goal. And we all live in different states and have different expenses and different family dynamics and stuff like that. So you have to work to create the goal that's right for you. Do you actually have a retirement amount set that you want to achieve, or some milestones that you want to achieve, that you want to share with us, Press?
I have I just want to attain $1 million by the age of 65,
Okay.
possibly more. That's like my far fetched goal. And then I have little mini milestones along the way, like 100,000, 200,000. You understand what I'm saying? And
Yeah, yeah.
I check them off. I'll be checking them off as I go along throughout my journey, and
So
maybe sharing with my audience.
so when you talk these numbers, for you, is it like assets? Are you counting Would you count a house, a car in there, or do you mean strictly your investment portfolio to be $1 million?
It could add on like assets of value, like real estate or things of that nature. But for me
Mhm.
personally, it's strictly investment stocks
Okay.
and or crypto for that matter.
All right. All right. So yeah, I have the breakdown that we were looking at in a previous live stream. You let me know whenever if you want me to pull that up, or if you want to talk through that with the viewers today. And thank you, um, everyone, for tuning in. I'm only seeing one person in the chat. So let me just take a quick look and see if there's any issue, like the chat isn't working, which has happened to us before.
Right.
Yep, yep, that looks like that's what's happening again today.
Oh no.
Because yeah, I see Bronze is here, Robert's here, Miss V is here. Thank you guys, for, tuning in. Vern, thank you guys so much. I'm sorry we're not seeing the chat on our screen right now, but I will do my best to, grab my phone or another device here. Let me see if I could, put it up over here. But yeah, just give me 1 second. Let me pause this. Maybe this could help me if I leave that there. Um, but yeah, Prez, let's get going
I'm
with
using
our
two devices myself, but that's not going to stop this show.
okay. You have something to hold the phone? Are you comfortable over there? We're having
Um, I'm gonna use both my hands and make it do what it do.
okay. All right. So, yeah. So let's get started with our uh
Sorry about that. Okay, I'm
no,
ready.
no problem, no problem. Guys, like I said, a little bit of technical difficulties today, but we're gonna try to push through and get through a nice little show that we prepared for you. As always, we've been coming to you every Sunday afternoon for the last few weeks, and um, you know, like I said, we both have a very similar philosophy in I think our investing strategy and wanting to um, bring this to beginner investors and show people that wherever you're at with your budget and whatnot, um, that you can get started with any amount of money. And at the end of the year or at the end of the next 10 or 15 years, um, I think whatever you get started with investing, you're going to look back and say, I'm glad that I accomplished that. Even if
Right.
it's $1,000 a year, I would rather invest that amount per year than to look back and say, I let the last 15 years pass with zero. So what are your thoughts,
Exactly.
Beth?
I totally agree with you, and I'm here to say that today's conversation, there's shortcuts. Basically, there's shortcuts. Um, where I like to stress that we are investors first and foremost, and trading involves risk and greater tax implications. So I advise you to please do your own research and or consult with a financial advisor or a tax specialist. Now, with that being said, if you, Lisa, you can pull up the chart with the age requirements and the monthly contributions.
Sure. So this is the chart that I think resonated with Prez on how to become a millionaire.
Now, if you some of the viewers may be age 35 or older, and you see you need to invest 115 to 190 a week, or more if you're age 45 and older, like myself, which is 325 a week. Now, that may seem a little far fetched to obtain. Now, imagine if you were trading, you're making 50, 60, $70 a week. You can add that profit to your long-term investments and shorten that time period or meet that monthly contribution or exceed it for that matter. Lisa, what do you think about that?
Definitely, definitely. And there's lots of different things that we do, like whether it's you have a take on a part-time job to supplement your income, like whatever
Hmm.
you can do. But definitely the things that I think you want to share throughout this show are ways to strategies to implement to accelerate your growth, especially if you're feeling like you are a little bit more of a mature age, that some time has passed. You're not 20 anymore. You're not 25. You're definitely not going to have the opportunity to build your portfolio the way that a younger person would. So, yeah, definitely something that I started to share a little bit more in 2024 that I do, but I
Hmm.
like you said, it takes a higher level of skill than just investing into an index fund. But it's an
Right.
opportunity that you need to take if you desire to put in a little time and effort into understanding it and doing it correctly, can generate you additional money towards your investing long term. So,
Exactly.
mhm.
um, the
And this
S&P
mhm. You want to say
basically has an average annual return of 10.26%. So you want to ask yourself, how can I and either beat the S&P by increasing those gains, or do I want to just take the word I'm trying to say, the low road, the more passive approach, and try to create other streams of income to make those catch up contributions to achieve that millionaire status by the age of 65. Now, one of the ways is by trading. There are multiple ways of trading. You have your psychological traders, which basically rely on certain types of news catalysts. Like, for example, when we were going through the pandemic and the cruise lines were shut down and a lot of the travel agencies were shut down, a lot of investors were betting on the immediate failure of those companies. So they were making money while the stock price was falling by trading what we call options trading, which is a leveraged form of trading, which is very high risk. And you should actually learn how to trade options before trying to trade options, because you can lose everything that you put into it. What is your take on options trading, Lisa?
Yeah, it's something that it takes. You have to take the time to learn it. That is something you're going to need to take a class. You're going to have to kind of understand, like a previous one that you had us also do was the psychology. And I think that that's something that you really have to have your head around with options trading and trading in general. You need to have a plan start to finish, and you can't let your emotions overtake what you're doing. I need to for example, I need to realize I can't get paid on Friday and go in here and think I'm gonna get into some crypto trade over the weekend with my entire paycheck with no stop loss. I have to get into it. Say if my goal was I wanna see if I can get into this trade. My intention is if it goes up this much, I can potentially get an extra $250. That's a trip to the supermarket and some gas in my tank. Um, but at the same time, yeah, it would be great if I could get into a trade and make 250, but I have to get into it also with the plan of what is my max that I could lose and it not be an issue, it not be any hardship to my family, to my budget for this week. And on that end of it, um, I might have to say, okay, maybe I'll have to figure out what would be a 40 or 45% loss if things didn't go as planned. And I can say that is going to be where I'm going to work. And then from that, if my trade starts to go in the right direction, I can then move up my stop loss immediately. So even if I come out of it with say 70% gain, not the whole 250 that I was aiming for, I set myself up so I'm not in a situation where I'm putting myself in any type of a loss. But sometimes it doesn't turn out that way. You never have the chance to move up your stop loss. And if there's if I'm not explaining this in a way that anyone is not clear to anyone, and I need to, kind of talk a little bit more in the app, in the trading investment apps that we use, there are features in there that you can use. And like if I purchase something, or if I get into whether it's an option or I purchase stock that I know is a trade, as soon as I put in the order, as soon as the order is filled it's in a part of my portfolio, I then seconds later I'm going in and I'm putting in my stop loss, basically saying if it drops by a certain percentage, sell it. And then from there, if as it moves up, I'm going in there and I'm adjusting the amount to move with it, to make sure that I am making sure to have myself come out of the situation with a gain. So, Prez, let me know if I'm explaining this well.
You're doing a wonderful job, Lisa.
Okay.
The stop loss is a very important tool that you use in the world of trading to minimize the amount of money that you're willing to lose. Because the worst thing you want to do is go in there and not use a stop loss, and then your emotions get the best of you, and you're wondering when is it going to turn around, and you're looking for advice as to what to do, as to how to get in, how to exit the trade, when you should have had a exit plan in place before you even entered the trade.
Mhm. Mhm. And I've made some mistakes in this, and, I'm glad to be here to share the good and the bad. I invested into, for example, Shiba Inu years ago. It wasn't a huge amount, but it wasn't until basically from 3 years ago
Recently,
it's from 3 years ago until now that it was actually in a positive position, but that particular crypto investment is a very small fraction of a penny, so wasn't a huge deal, and I guess when I got into it, I went into it with the attitude of I'm diamond handing. I'm just throwing this in, win or lose, not a big deal. But there are lots of things that, what we're talking about here today, we're talking about accelerating our portfolios for retirement or for whatever our goals are. So there's no just throw it in there and see how it goes. We are trying to make sure to uh, improve our financial outlook for the future. So none of that.
Lisa, I heard you say something about diamond hands. Could you explain what diamond hands is to the people in the chat?
Well, I was just generally say for me, that means you when you invest into something and you are holding it no matter what, until the end, whether it goes to 0, whatever, you are holding on to it, uh, without a plan. You are holding on to it. You are an investor for life.
When it comes to diamond hands, that is the attitude and the mentality that we do not want to have. We do not want to have the diamond hand mentality, because you could basically be like a captain in a sinking ship, going down with the ship. You're watching the price go down, and your stomach is doing flips, and you're on a hope and a prayer, basically. And that's not a good sustainable strategy to have in the world of investing, because you could be missing out on other gains elsewhere instead of betting on a sinking ship. You understand what I'm saying?
Mhm. But there are so many people, including maybe even me and you, if we were to go back 6 years, that don't even, didn't even go into something with a strategy, didn't even know what, a stop loss was, didn't know what percentage we were willing to, um we weren't evaluating all of those numbers and really understanding what are we willing to lose, what is the max, but now we have a different mindset when we get into things. But um, what else do you want to talk about on the psychology of trading? Um, I think you had mentioned about Bitcoin's impact on related sectors, especially like the mining companies and stuff like that.
Yes, that's one of the many examples of psychological trading. For example, you have Bitcoin creating new all-time highs, but you also have in the world of stocks, you have what's called Bitcoin mining companies, which get paid for simply creating more Bitcoin. And so, from a psychological standpoint, if Bitcoin is running up, then 9 times out of 10, the miners are sure to follow. So a lot of traders capitalize that are too afraid, or in Bitcoin itself at the same time, they'll capitalize on their gains from Bitcoin by trading the mining companies, making gains off of that. And they'll either add to their long term positions in stocks, or they'll add to their Bitcoin position, or both. There are many different ways that you can maximize your gains, is what we're trying to bring to you guys. And psychological trading is one of the main ways that you can maximize your gains.
Okay. Yeah, I definitely not so far this month, but this year I definitely have done some trades on Riot, Mara that were successful trades and made a little bit of money. So you do most of your Well, let me know. What do you wanna move on to next? Because I wanna make sure we're finishing our complete thought on something before we move on.
Let's talk about Riot real quick. You said you actually made money on the Riot trade. Well, I actually got into that trade a little late, and I ended up taking a small loss on the Riot trade. So
Mhm.
it's very important that you stay in tune with what's going on in the current news when you're psychological trading, because you can be late to the party and slow to the show and end up taking a loss like I did.
Mhm. Mhm. Yeah, and if you are watching, other, YouTubers and make sure that you are being mindful of, just because we mentioned something, you have to know what is your plan. Your plan may not match up with my plan if my I made this video 2 months ago. If you're watching someone and they don't really give you price levels, or they're not telling you the price of the stock when they invested into it, you need to have the whole picture so that you can know, is this particular price, stock or whatever, crypto, whatever type of investment it um, is it at a price point that is a buy? Or is it now overvalued? Do we, should we wait a little more? You have to know what your plan is for getting in and getting out if it's something that is not going to be a long-term hold. There are certain things I don't have to babysit, or I don't have to put so much thought into it, because they're long-term holds. They're, an ETF and index funds, my Amazon stock. I'm not watching it constantly. I don't have the level of concern of any price fluctuations with it. But there are other things that need more attention, and you have to realize, do you want to be in a situation where it may be in the red for a long period of time, and you're gonna have to wait for it to turn around. So, there are, I would say, more beginner-friendly investment choices that you can make, especially if you don't wanna have to put all of that work, or not even want. If you just don't feel that you are responsible enough, or whatever, for whatever reason, you have to make a plan that works best for you. But today is more, might be some more advanced topics than for a beginner, because Prez is trying to show you ways that if you're in the place where catch up is kind of your plan and your needs, in order to get yourself on track, because you feel I'm 10 or 15 years behind where I should be, there are ways to do that.
Basically, I don't want you to look at the numbers and get discouraged. What I want you to do is I want you to look at those numbers and be motivated by them, because there are shortcuts for you to obtain your goals sooner than later, with proper research, of course, and proper risk management, of course, and proper mindset, most importantly, because your mindset is the most important factor in this vehicle that we're driving to obtain financial freedom. If you don't have the proper mindset, you will fail, basically. And Lisa and myself don't want you to fail. We just want you to get started and stay consistent.
Mhm, mhm, mhm. And I think that we need to really focus on figuring out a budget, because, like, every month, I'm gonna pay my car insurance. There are bills that, there's no question that I'm going to pay: my electric bill, my internet, my Wi-Fi, my cable, whatever, because they are necessities. But you have to figure out your budget and make your investing, your retirement planning, make this a necessity, a bill that, an amount of money that needs to be allocated out of your budget in order to get on track with this. And when our bills go up, which they seem to always do, we seem to find a way, but we also have to not neglect our long-term investing is key. And I know it's torture going through uh the budget and really figuring out what you have left over, but I don't want you to take on that mindset of, "If I have something left, then I will invest." Make investing a priority and think of it as something that you have to allocate a certain amount to and stick to it. And instead of maybe the entertainment budget never being impacted, maybe impact the entertainment budget and not interfere with what has now been allocated as your investing budget. So,
When it comes to budgeting, I employ investing as a first priority and everything else after. So that means if I put investing first, I'm paying myself first because first and foremost is the younger me taking care of the older me. And then I make the necessary sacrifices on the back end. So if I go to work and I have a habit of going to the vending machine, so maybe I need to cut back on the vending machine a little bit. That's 5, 6, 7 bucks that I could have invested more. Or I could have not gone out that weekend or eaten out, done takeout that week. I could have cooked an extra meal or things of that nature. I'm not saying you have to live necessarily frugal, but there are some sacrifices that you can do without that day in order to invest.
mhm. I shared on my community the wall the other day about, meal prepping as a step that I try to do in order to save money. And yeah, just like you're saying, if I don't bring even I go to Target or Walmart and I get a six pack of sodas or a case of water, even that saves me money in the long run. Making my coffee at home, because even if that's the only part of what I pack to take with me, that alone could cost me over $2 for one drink, and never mind if I want a coffee and a water and a soda in the time frame that I'm out, that I feel like even if I just do my drinks and not my food, ideally, I do both, but any part of it that I can do is on track to save me a little bit of money during that day while I'm out.
I also preach a philosophy of short term pain for long term gain. So if I have to make myself personally just a little bit uncomfortable in order to make those sacrifices, because I know the gains are significant and the outcome so big, I'm willing to do that because I've probably trained my mindset to understand the power of compound interest.
Yes, yes. Does anyone need us to elaborate on anything related to compound interest? This is why what he is referring to is why at age 20, looking at what we're displaying here, at age 20, you can invest $26 a week, and at age 65, be at the same goal that um, at age 45 is then going to take you $325 a week to accomplish to pretty much be at the same exact $1 million outcome. This is why we need to invest early. I know that these young people do not want to listen to us, but we can still do our part to try to tell them and encourage them. I don't know how old your kids' age ranges are, Prez, but do you think that you're getting through? I know your younger son, you're getting through to him a little bit, but do you think that you're getting through to them to kind of make sure that this is a part of their life when they start working?
I believe I'm doing a very good job. I believe I'm getting through.
Okay. All right. So, do you want to get into some more of the technical trading that you do within your IRA for long term, or what do you want to move on to?
Oh, we can talk about trading in the IRA. For those who don't know, you can have more than one Roth IRA account, but your annual contribution, if you have more than one, for example, say you have two Roth IRAs, and what is the maximum contribution per year? Is it $6,500, Lisa, or is
No,
it
I think
six
it, I think
thousand?
it's no, I think it's 7,000. I think it went up.
7,000.
Yeah.
Okay, so if you have more than one Roth IRA, that 7,000 can't exceed in either one. So you would have to split it between the two, however you want to allocate it. Now, what I like to do is I like to trade out of a separate Roth IRA account. So basically, I can grow that Roth IRA account tax free until I'm the age 59 and a half, and I can withdraw all of that money tax free.
All right.
So
So
that's basically one of the ways that you can get around a tax loop to maximize your gains, because at the end of the day, it's not about how much money you make, it's about how much you keep. So trading out of a Roth IRA as well as having a separate Roth IRA for investing would be a good idea, in my opinion.
okay. So do you actually have a 401k at your current employer?
With my current employer, no, I don't.
You don't. Okay. So and just in case anyone is watching that's not familiar with it, IRA stands for Individual Retirement Account. So if you're working or in between jobs, or you've had previous jobs that you're no longer with, what you can do is, if you need to do it on your own, you can call up a broker like Fidelity. I think we both use Fidelity, but you call up whatever broker works for you, that and you would create your own retirement account if your employer does not have a 401k or 403b or something like that in place for you. And I'm actually seeing lately that some of these brokerage and investment apps have matching that they're even giving when you start up an IRA with them. And I've only been seeing that recently. I don't know if I was missing it because I wasn't looking for it, but I even see that on Webull that they're giving a match.
Robinhood has had it. Robinhood has had it for quite a bit. They had at one point they had a 3% match,
Mhm.
and now they're doing like a transfer bonus. So if you was to transfer your retirement account over with them, they're matching it. I think is 8% or something like that. But you have to be a paid gold member, and that's like $5 a month. But
Right.
there are other better brokerages that is out there that offer better bonuses if you were interested in transferring your account over with them.
All right. So I hope that, guys, I try to, like, I know I'm throwing in some definitions and things like that because I want everyone that tunes in to understand what we're talking about and know that there are these different options for them. So if you're working, or if you've had a previous job, make sure you're keeping track of whatever you put into that retirement account. You can probably move it. What I did was, I had 2 brokerages. That I had money at Empowerment and I had money at Fidelity. I decided to bring all of my accounts to Fidelity because that was my preferred place, and now I have multiple IRAs and my current 401k for my current employer, all under, one house there, and it's easier for me to keep track of. I'm there, not to say that I wasn't doing it when I had to go back and forth between the 2, but it's made it even easier for me to have it all in one place. I can be mindful of, the performance and all of that. And if anything was to happen to me, my family knows where to go for, where my accounts are at. They're not under 2 different places. But nowadays, with some people having, short-term jobs, and I've gotten laid off 2 times within a 4-year time frame myself, you're going to have investments that you get started with the company, and then now you left that company, and now you have to then move that money, be mindful of it, and know where it's at. So keep track of that. Find your money. If you have a job from years ago and you're not sure what's going on with that, what happened with that investment account and whatnot, make sure you're keeping track of it, and being mindful of the performance, because I think a lot of people's investments that they had in jobs from years ago is sitting around and not performing well, depending on what it was invested in. Never mind the situation of, sometimes people don't even seem to have the money invested at all. They just have it there and it never got invested. It's just kind of sitting, making a high yield savings account amount of interest, when it should be doing so much better. Just like you were
It's
mentioning.
even, I'm sorry, it's even possible that you could have worked on a job and they were taking out 401k contributions, and you had no knowledge because some people are like myself. I at one point in time I didn't fully read my pay stubs, and yes, there were bit contributions being removed from my pay that I didn't realize it was going into a 401k plan until I actually took the time to call these different brokerages like your Vanguard, like your Fidelity. Most of your employees use these main two as their 401k plan, and that's who they're dealing with. So I would advise you to check with these main two brokers, Fidelity and Vanguard, to possibly see if you have any accounts there with them that you have no knowledge of.
Yes, yes. So, this is something I've shared already that thankfully this is something that I've only had 3 jobs in my adult life. So, it wasn't a huge issue for me, but uh if I was starting off my career, say in the last 10 years, I probably would have many more employers than that. And so I'm saying that to say that nowadays, people that are starting off working are probably gonna have this happen to them multiple times. So, you have to be mindful to keep track of your investment accounts every time you change jobs and keep that money working for you and keep that money invested. So you're not losing out just because it was 2 years of contributing into a particular account. Don't then just take the money if they say, "Oh, it's only this amount." Make sure that you're moving that money directly into another investment account and keeping it going for yourself if you can, if don't have any financial hardship. Hopefully, you can just let invested money remain invested for the long term.
Or if you don't trust the broker, you can withdraw the money and simply invest it yourself into your own 401k plan or long-term investment account.
Yeah, so I basically did that too with my money that I had at Empowerment. It was in a target date retirement fund over there, and I was not happy with the performance. So for right now, that is an account that I've taken some of that money, moved it directly into an IRA at Fidelity, and then I invested it myself into FXAIX, which is an index fund that tracks the S&P 500. And last year, you were mentioning at the beginning of the show that the S&P has an average rate of return of about 10%, which
Right.
is which is correct. I definitely agree with that. But um, please be mindful that in 2023, the rate of return was about 27%. In the last year, from last March to current, the rate of return has been 32%. So, the market right now is strong as far as investments into certain ETFs and index funds. We're having an above average return. So, I would be happy with either one, but right now I'm hoping that it's gonna continue throughout 2024, which I is what I anticipate will happen, uh, because of different factors, including it being an election year and certain, uh, stocks, companies at the top of the, S&P 500 that have been driving the market. So, do you think that the
Especially
S&P
the new artificial intelligence revolution that's been going on. A lot of these big tech companies are venturing off into artificial intelligence, which is causing the market to be resilient, even though we have this inflation that seems to be trying to rear its nasty, ugly head again.
Mm. So, you wanna talk a little bit more about your trading that you do within your IRA and some of the tax implications that you want people to be mindful of when it comes to trading?
Well, as far as inside of the Roth IRA, it's already pre-tax before I put the money into the account. So I'm basically traded growing that account, that particular account in general, tax free until I'm the age of 59 and a half. I'll be able to withdraw all of that money tax free, no matter what the gain is. So I could have started it with $1 and grow it to $1 million. I got $1 million tax free once I turned 59 and a half. Now, if I try to withdraw it before that, there are tax penalties and implications will be taxed the same way as your earned income. I'm not sure the exact percentage. I'm not a tax specialist. So please consult with your tax specialist if you want to know the correct percentage on what you will be taxed for your capital gains, your short-term capital gains. Now, as far as a regular trading account, which is I primarily use the gains from that to add to my longer term positions and my regular taxable investment account because I want to have growth in that account as well as my Roth IRA account. Basically, I'm using my trading money to sprinkle it around into my many different accounts that I manage. And I also have my accounts structured the same way. I have one portfolio like a pyramid based on percentages. Like my retirement account, that's where majority of my investment money is going to. And then I have my shorter term accounts where, if I need to have come through some type of sort of financial hardship, I need to liquidate one of those accounts. Those will be the first accounts that I will have to liquidate because I'm going through some type of financial hardship.
So you shared, I think it was might have been last week, that you kind of unintentionally have uh, changed jobs and uninvested, took your money that was invested and then withdrawed it, took a penalty on it, and all of that. So, can you just share again for those who weren't here a little bit about that? And this, I know I already talked about it, but your personal experience of, you have to be able to advocate for yourself in these situations.
Right.
And I have a
So
per okay.
so basically I had left the previous employer and I had a nice amount of funds that I had allocated to be withdrawn for my 401k contributions, along with the company match, had I stayed there 5 years or more. Well, I didn't stay there the 5 years. So when I left the job, I contacted the broker about the funds that were there. And I was going through some sort of financial hardship. So I ended up withdrawing the funds from the 401k to accommodate my hardship that I was going through financially. But in turn, I had to pay taxes on that early withdrawal. And I didn't end up withdrawing the amount that I seen on the screen. So it's very imperative that you leave your money invested or be aware of the tax implications that can come with withdrawing your money too soon.
Okay. I see a comment. It might be on your side, uh, asking, can investments be used as collateral? And in my personal experience, I say yes, that they will allow you to use it. Like if you're looking to purchase a home or something, if you want to show that as potential collateral that you have. I'm not sure what type of
I probably wouldn't recommend it, but it is possible. A lot of banks, you will have to contact the actual bank and discuss that with them as to what they would allow you to use as collateral, whether it be real estate or stock. Through my research, I did read somewhere, I can't tell you exactly where, but you can use stocks as collateral for loans and things of that nature. I really wouldn't recommend it. Um, there are many other ways to come up with the money you need. Like we're talking about trading, for example, where we basically buy low and sell high with proper risk management and proper funds allocated to a trading portfolio. Like for all of my portfolios combined, my trading portfolio was only 10% of all of my portfolios combined. And each trade out of that trading account, I'm only using 10% per trade with the proper risk management. I'm only willing to lose 5 to 10% of that 10% of the trade. I think I said that correctly without twisting my tongue up. What do you think about that, Lisa?
um I agree with you on being mindful of over sharing things that may not be necessary, but I don't know this particular viewer's situation and what it is that they were going to be showing these particular things in their portfolio, what if it's
Mhm.
real estate or what their goal was. And your nightbot is over there scolding people, Press.
Oh no, I can't even see what's going over there. I'm looking at your chat.
Oh,
Um,
okay. So no offense, guys, over there. I see you got a little scold for putting too many emojis in the chat. But so let's move on to and this I think I've been able to contribute a bit to this conversation. I wasn't sure
yeah.
how it was going to go. I said to you, I think last night, but you also mentioned, I don't know if you still want to talk about this, covered call strategies, which I don't really feel it's not anything that I've done. So is that something that you still wanted to share in this live?
We can briefly talk about it. Cover call strategy is basically you own 100 shares of said company. So you have 100 shares of Apple. Now, call option is basically like leverage. You're in control per contract. You're in control of 100 shares. Now, there's a premium that you pay for this contract, and the premium either appreciates or depreciates in value according to the direction of the actual contract that you purchased, or what we call time decay. So if the it's not working in your favor, then the price will depreciate faster because of time decay. Now, to combat that, what a lot of traders do is they'll sell covered calls where time decay actually works in their favor. So you sold the contract for a premium, you collected the premium, and you're waiting for the contract to simply expire or depreciate in value, and you can buy that contract back and pocket the difference. So that's basically the cover call strategy in a nutshell. Now you may want to do further research on how to properly execute the cover call strategy before implementing it. This is not financial advice.
Okay. And now let's talk a little bit about dividend investing. Is that another point that you wanted to touch on in this live?
Yes, dividend
Not even
investing.
okay.
Dividend investing is a more passive way to maximize your gains. Like a lot of investors, they'll search out the more solid, the best solid and good paying dividend companies, so as though they can create what is called a dividend snowball, where they have their dividends reinvesting into that said company, as well as they're investing on their own into that said company. So not only do you have share appreciation, you also have dividends reinvesting back into that company, which maximizes your gains a lot quicker than your traditional buy low and sell high stocks.
Mhm.
So dividend investing is another way to consider maximizing your gains. I would encourage you to learn how to do it all, multitask. Take one step at a time, of course, but you can implement many of these strategies simultaneously to maximize your gains. But it takes patience. It takes the educating yourself. You definitely have to educate yourself, and it takes risk management.
Okay.
Just get started, y'all. Just get started. I can't stress that enough. I want you guys to get started, do your research, and stay consistent.
So do you I know you have Apple VTI and different things in your portfolio. So do you track your dividends in any way, or do you just is that something that you don't do any extra effort to track on a quarterly or a monthly basis, and you just have it set to reinvest?
I basically, as of right now, I have it set to reinvest because as far as my strategy, I'm also leaning towards growth versus the dividends right now. Now, my plans may change further down the line. I may get more into dividend companies, but right now I only have a few, like one or two, that pays a good monthly dividend, and VCI, of course, pays a quarterly dividend.
Mhm.
And Realty Income is the one that I love the most, that pays the monthly dividend. Also, Main Street Capital.
I didn't have a chance to look it up. Do you do I don't know off the top of my head how many if I've seen in the news that a lot of Dollar Trees uh, and Family Dollars are going to be closing across the US. Did you see that news?
Hmm. Yes, I
Yeah.
saw that.
Yeah, I didn't have the chance to look up, and I was wondering if that was a holding that is in the Realty Income portfolio, but I probably will take a look at that sometime this week.
I'm not
Um,
100% sure, but I think it is in there.
mhm.
I think it is in there. But when I see news stories like that, I look at it like who controls the media, and they're the ones that's trying to get us to buy these assets high and sell them low. So if you guys don't do your proper research, you're going to see like headlines like these on these said companies that we're invested in or looking at to invest in, and it could deter us away or shake us out of our positions. And we sold something, a valuable asset, for a lower price than what we paid for. So we're basically transferring the money that we worked hard for and took the time to invest it. We're transferring it back to the corporations and institutions, and that's not the proper way to go about doing this. You want to do your research when you see negative news stories on companies and things of that nature, because it could just be a bunch of smoke.
Yeah, yeah. So another thing on a dollar, something another company with dollar in the name, Dollar General, they had good earnings report, but their stock price did pull back a little bit. I'm not sure if you're familiar with this. I know I didn't tell you I was going to mention this, but did that
Mhm.
surprise you at all?
Yeah, it kind of did surprise me because normally
Mhm.
good earnings, when a company reports good earnings, the share price normally skyrockets briefly, and then it has a nice little cool off, and then it eventually recovers and appreciates in value even further. So when a company reports good earnings and the share price tank, it's a bit surprising for me because that's not normal.
Okay.
Normally, when a company reports bad earnings, the share price tanks.
So guys, we're having some issues, some technical issues today with the chat, else I would have been highlighting some more of y'all comments that are coming in. I see a Trudy shared that checked on it for me, I guess, that there's 1,000 Family Dollar and Dollar Trees closing,
Hmm.
according to CNN today. And 21 Slugger says puts on Dollar Tree. uh, I
Make sure
see.
you have a stop loss on them puts because we are not in a bear market right now. So the downside will be pretty short lived, in my opinion.
Mhm.
Yeah, the market is due for a slight pullback because it ran up too far too fast. So, but the downside is limited. I believe we're in a full on bear bull market, and you might get smoked if you play put if you overstay your welcome when it comes to those puts.
And I see someone in the chat is sharing SPLG, SCHD, and Apple. I guess that's their dividend portfolio or some of their dividends plays that they are building up. And I'm not sure what is SPLG off the top of my head, but they're all familiar. I'm sure that
Yeah, they are familiar. And they
yeah.
sound like some pretty good choices. I don't know
Yeah.
about SPLG either, but the rest of them they're
The rest
pretty
of them are
solid
more
choices
familiar to us.
as far as dividends are concerned. And I plan on dabbling into a few of them. Um, is it SPHD or I get it so confused. I own one of them, one of them I don't. The one that I don't own, I'm looking to get into in the near future.
Yes, I added SCHD this year. I had been doing SPHD throughout 2023. Well, since I started the passive income challenge, which was the year before last. And Al shared that Realty Income has 7.1% of dollar stores in their portfolio. She wrote
Hmm.
dollar store, so I don't know if it's I'm assuming that it might be specific to the Dollar Tree and, Family Dollar that I mentioned. So, I know you asked me about that, I think last week, how did I feel about my position
About
in Realty
realty
Income
income, yeah.
and it going down to looks a little dark, going, the price point not the stock price not being as stable or as high as it was when I first
Is
invested.
compared to the rest of the market.
Yeah,
Yeah,
yeah.
it had me a little concerned, but once I got your viewpoint on it, it kind of eased my mind a little bit. I did a little more research, and realty income ain't going nowhere in my portfolio.
Okay.
They I read that they recently increased their dividend for another consecutive month, so that's a good sign for me. They're still increasing their dividends. They're not going anywhere. So realty income is here to stay in my portfolio. I'm still going to continue to allocate to it less than what I was, but it's not going anywhere.
All right. So, guys, if you tuned in late, today's topic was around strategies and just getting your mindset around how can you make steps in order to maximize gains in your portfolio. So, drop any questions that you have around that and let us know what you've thought of the points and strategies and things that we've shared in today's conversation. Um, Let me take a look. I'm still in dollar. Okay. Yeah. So people are agreeing with you, saying they're still going to dollar cost average into O. We're not turning our back on it. I just wanted to just mention that because I saw it in the news and I thought that that holding was a part of the properties that are owned by under the realty income umbrella. So what else
I
are
also
we?
noticed that Apple has been recovering lately,
Yeah.
despite the rest of the market pulling back. Apple wants to come alive all of a sudden. What's your take on that one?
On Apple, oh gosh. Apple is another one of those things. Apple was pretty much my favorite investment. Apple was over 50% of my portfolio, and I've been actually working to bring that down because it was too heavily. I was too heavily invested into Apple. I don't know. Am I the only one who had that issue? But it worked out well for me because we throughout, these years when we were going through all of this lockdown, it's only been since we went into this situation that we were in a few years ago when I was home that I started investing into some of these individual stocks like that. So it's done well for me. I think that, looking at the PE ratio, there are companies that have more potential, than Apple right now. But I
Hmm.
still think that it's a strong company and something that I think of it like as a consumer. It's all over my house. I have 2 I every ti since I've been having a smartphone, every phone I've had has been Apple. Most of my family members have Apple phones, and we have MacBooks, and I don't think overall that we're gonna AI and certain technologies, they're kinda lagging, and this Vision Pro situation is not what they anticipated it would be, but I just think of the big picture that people are really fans of the product, and I don't see that changing. So, not talking technicals about the company, that's just a general way that I feel. Um, but, sometimes it's just hard to have to Apple didn't, because I've been invested into Apple for so long, even though the Apple stock price has been, dreary over the last few months, I really didn't even see it because, I was up, say, 40% or a little more at times on my Apple. So for it to be down to, say, 33% in my portfolio, it's not as drastic. It's not like when Target or Tesla, when those came down, it brung it completely into the red in my portfolio. So Apple is still a strong performer, always in my top 5 and a large position in my taxable growth portfolio that I do on Webull. So
I personally saw this week as a good buying opportunity for Apple, especially if you don't own the Apple. This week would have been a good buying opportunity to establish a position in Apple during amidst the Apple pullback is like what I like to call it. While the rest of the market was running up, Apple was falling. And when it comes to trading, a lot of traders like to use what we call technical analysis. Basically, you're analyzing the chart based on historical price data. And we find what is called support and resistance areas is to use them for entry and exit points into stocks in general, and it can be also used for crypto. So what I did was I waited for Apple to find a nice support. I think it was around the 170 range, and I was patient about it, and I increased what I would normally dollar cost average into Apple. So let's say, for example, if I would have bought $5 worth, I saw that it was down like it was, I would have put $10 into it instead of my normal five.
Okay. Yeah, we all have to keep up with our plans and evolve them with if we're going to be that type of investor. Definitely, if you're going to be a trader, you have to do it. You have to have the plan. But even as an investor, you can implement different things like that into your plan to build out the positions when you see those opportunities. So, did you do the
Like
same?
adding seasoning to your food.
Mhm. So, did you do the same with Target this week at all? Or
I
not
didn't
Target,
touch.
not Target, I'm sorry, Tesla, or are you still waiting for?
I actually picked up a little bit of Tesla in my channel portfolio as well. So Apple, Tesla, and Microsoft got added to this week in my YouTube portfolio. Tesla is definitely a good buying opportunity right now. It could come down a little more, but if your dollar cost average and consistent, I don't think you have much to worry about because before you know it, you probably won't see Tesla at these prices anymore once it starts running again.
Mhm. So do you remember where you were in your investing and, like, what your budget was looking like when Tesla came down to around $100?
The last time it came down to $100,
Yes.
I wasn't ready.
You wasn't
I
I
wish
was
I would have been. I wasn't ready. I'm not even gonna lie to you.
Yeah,
But
me neither. I don't know what certain things, listen, there's so many things. More likely you will say, "I wish I invested more."
hmm
So, listen, keep that in mind if you're getting started in your investing journey, that's I think that's more people's story than, I overinvested or I did just right. Most likely, I think more people say, "I wish I invested more. What was I doing?"
right.
You know? So, I think we've touched on all of the different, points that you wanted to cover today. Anything else you wanna talk about?
Yes, we did. In closing, I just want to when you look at these numbers, these projected figures, don't be discouraged by the numbers. I want you to be empowered by the numbers. Use these numbers as motivation because you have the power at the end of the day to increase your gains with proper research, risk management, and mindset. And that's most important, your mindset. If you had the proper mindset, the sky's the limit when it comes to maximizing your gains. Like you can become a millionaire a lot sooner than the age 65 with proper risk management and research.
Mhm, mhm, mhm. So, guys, thank you guys for tuning in. Please leave a comment and let us know if there's any topics that you would like us to see covered in future collaborations with between the investor and me, Lisa J. Stocks. Please make sure to subscribe to both of our channels. Prez, did you have anything in mind for any upcoming topics?
It's a surprise. It's a
So-
surprise.
okay.
Just tune in next week and we'll continue to provide you as much value as we possibly can. I want to thank you guys for your time. And you don't find a way to make money while you sleep, you will definitely work until you die.
Okay. Okay. Bye. See you guys soon.